Welcome to the Stash Cast, where innovation meets real estate. Let's dive in.
All right, Amresh, thank you so much for coming to join me today. I really appreciate it.
Thanks for having me. I appreciate the time.
For the listeners at home, your name is Amresh Singh, and you're the, founder and CEO of HomeAbroad.
Yeah, that's right.
So I guess maybe you could give a background of what HomeAbroad is, and then we can get into how you got to where you're at, and then we can get into topics relevant from there.
So, Home Abroad, we like to consider ourselves as a one-stop shop for global investors who are investing in US real estate. We help them right from finding the right investment property with our AI-powered property search platform. So you just put what your investment objectives are, where you're looking, and our platform will mine all the data from existing listing on the MLSs and feed you the right investment property. We help them with financing. So if you're a global investor who doesn't have any US credit history or US residency, you can still finance 75% of the property through us. And then we also help you everything in between and beyond, from setting up an LLC, helping you with a US bank account, anything that you need in that transaction. And after you purchase the property, like connecting with the property management company, etc. Once you are in, we take care of you right from finding to funding and after the transaction. Why home abroad? I think it's related to my background as well. I came to the US 10 years back from India and realized that US real estate is very different from the perspective that you take high rental leases and 30-year fixed rate mortgages that's available in the US. It's probably only one of the few real estate markets around the world where you can generate cash flow with leverage. It doesn't happen in most markets around the world, right? So 25% of your money buys you 100% of the property, rent covers mortgage day one, property appreciated in US dollars. It's a heaven for real estate investors, right? But also anyone who's looking to get a return on their money. And we are opening US real estate to the world. Now, there's a lot of interest on investing in US real estate because of the factors that I just mentioned. We are seeing great traction. A lot of our clients know about investing in US real estate through us. We're also increasing the market. But as part of this journey, we also realized if US real estate investment is so great that global investors want to put their money in the US, why only 8 to 10% of Americans own investment property?
Yeah.
The platform that I just spoke about, we're also trying to launch a brand, same concept, same product, just opening the market to US based investors as well.
What are you going to call the based investor product?
It's called Ziffy.ai. So Ziffy.ai is going to be the platform where you come in.
Yeah.
Exactly. Because if you think about it, what's the biggest roadblock that someone has in their mind? Everyone wants to create wealth, make generational wealth, right? People don't take the next step, right? But if you have an open platform like Zillow, you go to Zillow when you're looking to buy a primary house today, right? And there's nothing that exists today in the market when it's Zillow for investment properties, right? So I want to invest, I go to a platform, I punch in my investment objective. Example, I want to generate at least $300 in cash flow every month, or I want to get at least 20% return on my cash invested to buy investment property in an area with job growth, population growth, appreciation, landlord friendly laws, whatnot. You punch in those parameters and our platform will mine the data and give you the properties that meet your investment objective, show you your year one return, year five return. You can also put attributes like currently rented property. So if you want to just look at properties who are currently rented and are being listed on the MLS and investment property for sale, you can do that, right? Plus add AI to that mix. Now you can ask AI, okay, show me the growth trend in the area, population growth, job growth trend, demographics, right? This entire information that no one has today, right? Would suddenly, if I am someone that has never done real estate investing and I go to a platform and punch in what my objectives are, and I suddenly see the numbers in front of me, right? And I can take data-driven decisions, suddenly I'm one step closer, right? Combine that, most investors in the US don't know about specialized products for real estate investors, right? Where you can get a mortgage based on the rental income of the property, right? We are saying the USP of US real estate is rent covers mortgage because rental rates are high and you have 30-year fixed rate mortgages, right? Why don't more people know about it? And if I have a mortgage already on my primary home, I have a car loan to pay and have other obligation. I feel like, okay, I can't get another mortgage to buy investment property. And more than that, right? Once I get that mortgage, I don't have to make the monthly payments because my property is going to work for me. The rental
Right.
income is going to work for me. People just don't know that, Stash. And that's what we're trying to democratize for both global and local investors, right? Getting that information in front of them and getting the knowledge out there, because knowledge is power.
I'm curious because I don't have experience abroad. You mentioned at the very beginning that other countries don't have 30-year fixed rate mortgages. You're from India originally?
Yep.
Yeah.
Yep.
So how do people buy houses or flats in apartments or things like that? Is there
So
debt available?
yeah, debt is available. You have home loans, you have mortgages available, right? But they change as the central bank's interest rate changes, your mortgage changes, right? The rates are not fixed rate mortgages, it's adjustable
they're
rate
all
mortgage. They're all floating. So I can have a payment shock, right? The macroeconomic conditions change and the interest rate changes, my rate that I'm paying on my mortgage changes, and my monthly payment can increase or decrease, but mostly increase in most situations on a monthly basis. You don't have that. If I'm a real estate investor and I have to go through that concept that my cash flow can increase or decrease depending upon where the interest rates are, it's not a very calming situation as a real estate investor. But in US, right, I know that my monthly payment is going to be fixed for the term of the loan, which is 30 years. The payment is amortized over 30 years. So you're paying relatively lower amount every month. If I'm a real estate investor, that's great from return on cash perspective, right? But also I don't have any payment shock. I know that my monthly payment is going to be flatlined across the term of the loan. I'm going to increase the rent every year. So my rental income technically is going to increasing year over year. So my cash flow keeps increasing year over year while I'm holding the property, right? That kind of blanket of security doesn't exist in, for example, India, right? If I'm a real estate investor in India, this concept of taking financing to buy investment property does not exist. Like you are buying investment property in cash in India or in most markets around the world for that matter. And you are banking on the appreciation for return. Whereas in the US, 20%, 25% of your money buys you the entire property. So there's leverage, right? So I can buy 4 or 5 properties with the same amount, right? But each property would cash flow, right? So I'm generating passive income every month with 4 properties. And now they are appreciating in US dollars, which happens to be stronger currency and shields me from currency risk because USD is still the reserve currency for most of the world, at least for now, right? It shields me from currency risk, right? So there's a lot of factors that go into why I would put my money as a global investor into US real estate market. Plus, I'll give you another example, right? We in US, we don't realize it. The market, real estate market is very stable and secure. And here's why, right? Because in India and in most countries around the world, I'll say the new developments are majority of the home sales, right? So a developer is coming up with a development, right? When, for example, let's take Dubai, right? It's another hot market for global investors, right? But most of the home sales in Dubai is new developments. Developers are building up new buildings and people are buying up vacant condos in those buildings, right? Whereas in the US, it's 80% home sale are existing home sales, right? So what that does, when everyone is buying new developments, it's creating an artificial property bubble. You don't know it yet, but if I'm selling a property in Dubai, why would I buy an existing condo when I can get a newly developed condo at the same or better price? That creates an artificial bubble, which we'll explore at some point. Whereas in US, given the most of the home sale are existing home sales, the market itself, the real estate market itself is very robust. So the probability that we're going to have a 2008 like event is very low in the US real estate market.
Yeah. Yeah. We're not seeing lending like we did leading up to that was an interesting time where you had no doc, no income.
Exactly.
They call those
100%
ninja
down.
loans. Yeah, 110%. Crazy.
Yep. Those don't exist. Even if you talk about even the loans we do based on rental income, right? You have enough equity in the house, right? So for foreign nationals, you're putting 25% down payment. So you have 25% equity in the house and rent covers mortgage. So from a risk standpoint, the LTV is enough to make sure that the 2000 event doesn't happen. So yeah, so it's a very different market that we're talking about.
Yeah. And hearing your perspective on things and where you literally come from helps. Oh, that's how and why he came up with this. So you came over here with that experience from back home and you're like, oh, look at this. Oh, we can make something of this. That's really cool.
Yeah. And I was used to work for one of the largest international bank in the world as well. So I saw them catering to global investors, but they were catering to top 1% clean population, right?
Yeah.
And the market was much bigger, right? So my professional background and personal background knew that this is a very underserved market with huge untapped potential, and we can really build something big in this niche. But when we started to build this, we thought, wait a minute, we are catering to US real estate investment. How does it matter whether global or local? Because there's clear gap that whatever we're solving in the global market, the gap exists in the local market as well. Let's just combine this together, increase our addressable market, and be one-stop shop for US real estate investment, be it local or global.
And it's interesting because you're creating like a blue ocean and helping to open the existing market to a whole other group of people that are interested in being participants. They just it's a difficult system to navigate. So how do you go and recruit new users of the platform? Are you running ads globally or how does that work?
It's mostly knowledge based, right? So there are two ways I'll speak to, right? There's one persona who is already online and who is looking for, can I buy property in the US? Can I invest in US real estate? This is the
They're
person that is
already trying to
educated,
do
right?
that.
They're
Yeah.
already one step ahead. They have a family in the US. They know investing in US real estate is a good thing. They lived in the US for some time before they moved back to their home country. They know they're one step ahead. They know investing in US real estate is a good thing. When that person is online, we are leading by knowledge and awareness. So we have our content out there that helps them educate them and then drive them to my sales funnel, right? And then the other persona who doesn't know about it, right? Where I don't know that investing in US real estate is a thing, or even US real estate market is open to me. Well, it's counterintuitive, right? If I'm someone in, say, my home country, India, why would I invest in US real estate? I don't know the benefits. And on top of it, why would someone give me 75% financing to buy real estate in the US when I don't have any connection to US and the financing ecosystem, right? It's counterintuitive, right? So that's why we do a couple of things. So we partner with right B2B partners who have access to the clients who have the wealth to diversify in the US real estate market. Then our job is to explain them the why you should invest. And then the US real estate as an investment asset is not only available to you, but available with leverage. And then when we explain them, it's an aha moment because it's not something they find in their home country.
Right.
So it's two-way acquisition funnel for
Two
us.
different personas that you're
Yep,
targeting.
exactly.
The ones that are already interested in
Yep.
doing it, they come across
Yep.
you. And probably what happens is they don't click on you the first time, but they keep seeing you pop up. And it's like, all right, maybe I should take a look at this.
Yeah, we do even one better sell because we know in this niche, the knowledge is the key, right? So we try to get them to our knowledge-based resources where they can come and educate themselves, really understand the why, really see the numbers, right? See, okay, here's the property. And that's the reason why we built that entire platform because we wanted the numbers to do the talking. We didn't want it to sell. We wanted them to decide for themselves. And that's the best kind of selling. When you are not pushing a product, the product is so strong that
Right.
you want it. And then you reach out.
Yeah.
And that's what we're trying to build, right? Because we know we have a strong product. The US real estate is a strong product. It makes sense. It is a tool to build generational wealth. These are all facts, right? So we don't have to do anything different. We have to state the facts and the fact will sell for itself. And that's what we do. We help them come to us. We explain them the facts. We show them the facts through numbers. And then we let them take the next step, which is talk to us, get into the process.
The Stashcast is brought to you by Needle. What if you could use data and analytics to predict real estate transactions? With Needle, you can. Check it out at needle.us to learn more.
One of the things that I have learned through my career as a broker is that you live and die by your manager. And you can tell when somebody buys a deal or when they're in it and they're struggling. And it's sad sometimes, most times, but you have an inexperienced investor who comes in and thinks, oh, I'm from California. The price is so amazing. How could you lose? And the answer is you can lose pretty quickly. You live and die by it. So how do you
Absolutely.
help these folks that are using? Because I'm sure that the lenders want to know the So how do you navigate that or those?
Yep, and that's a great question, Stan, right? Because also keep in mind, like a lot of these investors, they're not here, they're not local, right? They're going to be managing this property from their home countries, right? And everyone has a different appetite as well. Some are more hands-on, some wants to be more hands-off, right? Some want more rent protection. We don't offer property management in-house today, but what we do for them is we vet some of the property management companies that operate in some of the hot markets. We vet them. We understand what their appetite to work with someone who is not in the country, who's a foreign national global investor, what kind of solutions they offer to these global investors, right? So we try to make the choice simple for them through a marketplace where they can go and compare the options and what's available to them, right? And then we act as a marketplace for them where they can make connections, interview the property management companies based on their appetite, based on what they want to do, and then find the right property management companies that will help them meet the investment objectives. We also try to put a lot of property management software tools. If you're someone who can do a lot of this stuff yourself using right software tool, because there's a lot of technology developing in this arena every day. We try to vet all those options, make this available to our customers, and let them make the final choice and what makes sense for them based on the vetting that we have done upfront.
So it's almost like you have a separate of marketing you're doing to recruit new third-party managers to the platform.
Absolutely.
Do you have a vetting process with that? Of vetting?
Yes. So we want to make sure that our clients are taken care of, right? Because keep in mind, like real estate investing, right? Customers are built within the process, right? If they have a good experience, they're going to repeat that whole cycle. You buy one investment property, rent covers mortgage, property appreciates, you take a cash out refinance, you use the money to put down payment on another property, and you repeat the cycle, right? The one property that you bought, within 10 to 10, 15 years, you can use that first property to actually build a portfolio of 5, 10 properties if you do it right. So we want to make sure that our clients have a good experience and they connect with the right, as you mentioned, you live and die by management. So you need to make sure that you're choosing the right partner who aligns with your investment objective, right? And we want to make sure that we're the right property management company. So our clients have the right experience because our name is attached, right? We want to protect our name, our brand, right? We want to make sure that they have a good experience. So when they're looking for the next transaction, they come to us. Right. And same thing goes with property management companies. We want to build a B2B relationship too, where if they have a client that they want to refer over to us, they can refer that as well. We offer a good referral fee as well. Since it's a business purpose loan, it's outside of trade transaction, we can actually offer referral fees. So it's a kind of a win-win relationship for everyone involved in the process.
So we're putting it all together. Let's assume that we've got experienced quality third-party managers. We've got people that are interested in buying deals with capital to be able to do. Insurance is pretty easy, I would imagine, because they're attaching to the property.
Yes.
And how do you find lenders that are willing to take the risk of, and are the loans recourse loans to lend to somebody who is?
Yeah. So we are the mortgage shop. That makes it easy, right? So
There you go.
that's the most difficult part of the transaction, right? That's why we would like to consider ourselves, we are trying to control the ecosystem, right? The reason why we developed this property search platform, right? And all this helping them with finding the right property management connection, real estate agents, right? Because we want to control that ecosystem. But ultimately, what's the glue? The mortgage is the glue, right? That's what I'm looking for leverage. Until I have someone to finance 75% that of the transaction value for foreign nationals, none of these will hold true, right? So we are the mortgage shop, right? And we work directly with investors on the capital market side who have the appetite to securitize these loans in the capital markets. One, as I mentioned, there's enough skin in the game. These foreign investors are putting 25% of the capital as the minimum down payment that we need or loan to value that's needed. So they have enough skin in the game to not to default, so to speak. Second is the way we underwrite the loan. So we are underwriting not on your personal income or assets. We are underwriting based on the property's income or the merit of the property. So till the property's income, which is the rental income, is covering the mortgage payment, your principal, interest, taxes, insurance, HOA, if any, then you're good for the loan, right? So the fact that rent covers mortgage, I'm not looking into your personal income or asset. I'm looking at the rental income of the US property, right? Gives us a little bit better protection, so to speak, combined with the equity that the customer has in the house. And of course, we have the risk overlay of rate, right? So the rate for an investor is around, I would say, it's nothing atrocious. It's only around 0.5 to 0.75% higher than what a domestic US bet investor would pay for the same property, right? So there's some risk overlay on the rate as well to give us protection around that side too.
But you're fixing those rates. Local investor might balk at what you're providing, but somebody from overseas who otherwise wouldn't have the ability to enter the market in a streamlined fashion, they're like,
Yeah.
you know what, whatever. It's just a cost of doing business. And so in that way, it's still a win.
It's a big win, right? Because if I'm a global investor, right, and I have no affiliation to the US financial system, I would be thinking if someone even gives me financing, it's going to be 14% interest rate. That's not the case, right? You're only paying, a domestic investor is paying 6.5, for example, you're paying 7 to 7.25 as the interest rate. That's highly competitive interest rate that you're paying. Plus, keep in mind, even with that rate, ultimately, you're making sure that you're cash flow positive. I
Right.
think about from a real estate investor perspective, it doesn't matter what the rates are till you're cash flowing on that property and rent covers mortgage. It doesn't matter, right, at the end of the day. But having said that, the rate will determine your cash flow amount or value, right?
Which then determines what you can pay for the property.
Exactly, right?
Yeah.
So it all comes together, right? But controlling that part of the transaction actually gives us superpower, right? Because then we can actually, because we are the mortgage shop, we know exactly what the rate of each scenario would be. So we are able to actually, that's the reason why we're able to show them the cash flow on every property, and we're able to mine the data and we're able to show them this property would generate you $325 in cash flow every month based on this estimated rental income, this mortgage payment that we know because we know the rate for this scenario, right? And hence you can make a data-driven decision on whether this investment makes sense to me or not. That's the gap that we are solving in real time today. That tool doesn't exist out there today.
It's awesome.
And same is true for the local investors too, because when we were building this tool, we're like, wait a minute, even only 7% Americans own investment property, right? And why is that? Right? If it is such a great wealth building tool and generational wealth builder that global investors are putting money into it, and it makes sense, right? Then why are not more Americans owning investment property, right? And if when you peel the onion a layer deeper, then you understand there are two problems, right? First problem is lack of awareness or knowledge about specialized mortgage products like what we offer. It's called a DSCR loan, debt service coverage ratio loan, which means I'm not underwriting on your income or your asset or your tax returns, right? If you are in your mind, you're thinking, I can never buy investment property because I have this mortgage to pay and my debt to income ratio will never make sense, right? That's not the case. Till the property rental income covers the mortgage, you're good to go. And people just don't know about it. And second is the intent to take the next action, right? Because those numbers are not there. It's not that what we are doing is very novel, right? There's a lot of platform that subscription-based models where you can go and you can punch in your property address and you can get a pro forma or analysis of the rental property that you're buying. That exists today, but it's all under a subscription-based model and available to seasoned real estate investors. If I'm a seasoned real estate investor, I'll take one of those subscriptions to understand that, right? It's not out there for public where I can go and punch in, see the numbers, and then educate myself on specialized loan products and then take the next step. That's what we are trying to bridge or from a gap perspective. And that's where we feel is a huge opportunity, both on local and global side.
What, and maybe it hasn't been a surprise, but have you been surprised by the inflow of capital from any given country? Were you like, oh, I did not expect that? Where were a lot of your users coming from?
So we have, of course, the usual suspects. And Canada, a lot of Canadians invest in US real estate. Again, in Canada, the market is very, very different. So they actually, the concept of generating cash flow with leverage doesn't exist in Canada. So by default, a lot of Canadians want to invest. Plus, a lot of Canadians who are snowbirds and come to the US to escape the harsh winter months. They want a property here. So of course, Canada is usual suspect. But you have also Mexico, South America as a whole, a lot of interest. Mexico, a lot of people are trying to move. Actually, we have a lot of clients who are liquidating their assets in Mexico and they're trying to buy property in the US because of political situation, weakening pesos. So they will just want better stability for the hard-earned money, right? In the US market. Of course, it's the largest economy in the world, stable and secure real estate market, right? It just makes sense. Plus also proximity to the US, right? Overall, Americas, I would say, drives the most of our volume, right? But then, of course, Europe, one country I was surprised was South Africa. A lot of South Africans actually are investing in US real estate, which I was surprised to see the numbers and data. But that's the case, right? India is another market where we're leading with education and awareness. A lot of billionaires and millionaires in India. India, if you think about from the quantity of billionaires and millionaires, it's in the top 2, 3 in the world, right? So a lot of potential for them to educate about why US real estate investment market. So that's one market where we lead with knowledge and awareness. Right? People don't know, but when you educate and when you make them aware, then the intent to transact is there. And that's the reason why I say it's a huge untapped market, because the market could be much bigger, because people just don't know that this US real estate as an asset class for investment is not only available, but available with leverage. And that's where we come in.
When you got this idea, were you daunted by the prospect of building it? Or you're just like, this is such a great idea, I'm just gonna, because I'm thinking about what you've done. And I'm like, oh my God, it's amazing.
Yeah, it doesn't happen in one day.
No.
And we didn't start with a very different concept in mind. We were trying to match these global investors with real estate agents in the US, right? And then make money by getting a cut of their commission. And then we kept identifying gaps at every step, kept adding solutions, products as we understood more gaps. It was not, I had this brilliant idea one day and I started executing. I wish that was the way, but it was more around, okay, let's embark on this journey. There's something in here. I don't know how the product is going to shape up. Let's start solving the problem.
Yeah.
And the challenges that we face during that journey will shape our product. And that's exactly what happened. But as we went in, we had clients coming in saying, great idea, want to invest in US real estate, don't know where to buy. Not where to buy, where to start, which city, which county. They don't know anything about the US market. And then we found ourselves going to Zillow, mining the data there, going back to the client saying, this property on Zillow makes sense. Here's why. And they're like, wait a minute, let's build something.
And once
and
you
then
do that
realize,
enough times, then you're like, oh, I can just build some processes to do this automatically.
Exactly. And that's exactly what happened. So we built that. And then we were like, wait a minute, same thing as an issue for local investors. They don't know where to go when they're like, if I'm say living in Buffalo area, I'm trying to find investment property around Buffalo area. And that's how most investors are, even in the US market. Even if you think about investing, they don't go beyond where you're from. There are a lot of good opportunities, might not exist in where you exactly live, but in neighboring state or in Florida or Texas or like Midwest, Ohio, where the rental yields are high and property prices are low, it's a heaven for investors, right? So we're like, let's use the same platform technology for local investors because they are facing the exact same issue. Same thing with loans. Like local investors don't know anything beyond conventional loans, right? Like I have a primary home, as I mentioned to you, right? If my debt to income ratio doesn't support buying a second property, I will not get a loan if I go to my local bank. But they don't know the specialized loan products for investors, and the interest rates are probably the same that they would pay for an investment property on a conventional loan. But this knowledge is not that common stuff. And that's the reason why, as I said, it's not that we had this great idea one day and we started building. Is in the journey, we realized the gaps and we started building for those gaps as we start. And that's why the company we started is very different from the company that we are today.
Would you describe those as pivots or evolutions in the solution?
Yeah, pivot is an interesting word.
I'll tell you my thoughts on pivot and then you can share yours. And I apologize to any startup founders out there that have said we've done a pivot. And when I hear pivot, it sounds like we had this idea that we thought was going to be great. And we went out and spent a bunch of time and maybe resources on it and found out that the market didn't really care that much or didn't want it. So we had to completely go and do something completely different. Whereas I think an evolution, a 2.0, you might say, is more about, okay, we have a solution that people want, but we see some gaps, and maybe that, like you've described, maybe it involves just changing our revenue model. So that's not really a pivot. You're still trying to serve the users that you're originally targeting. You're just doing it in a different way. So I wouldn't call what you did as a pivot. I would call that an evolution of the solution.
I would say it's great mind. I have exactly the same feeling. I think that's how even when I share with our internal team, like, how would you define our journey? It's an evolution, right? We're not doing something very different. Like we didn't just woke up one day and say, oh, this is not working. We got to start something else, right? We basically evolved in our journey. We saw the problems. Instead of building day one and then betting with the toss of coin whether this will be something that customers want or not, right? We lived that journey, saw the problems, and built something to solve that problem, right? And that's evolution. That's exactly
Yeah.
how we would define evolution. That is what it is. And I totally agree. It's more of an evolution in your journey as a startup founder, right? Than defining it as a hard pivot. Or pivot is again a very popular word in startup community, right? But again, you have to question yourself whether what you're doing is more of an evaluation or a pivot. And I would say, Stash, it's also different from a VC funded company than a company like ours, who at this point we're still trying to self-fund ourselves through our revenue versus raising a VC capital, right? Because if I have VC capital, I have the luxury to pivot, right? I can wake up one day and say, oh, you know what? This is not working, still a lot of cash. Let's do something else, convince my VC partners, and that's a pivot. I think that's where the word came from, right? But in our journey, as a bootstrapper, so to speak, which is looked down upon in certain segments, right? There's no other choice than to evolve. That's the choice you got to make. You got to evolve to stay ahead, to not die.
Yeah. I hope that bootstrapping is not looked down upon, because I feel like if you can build a successful company and you bootstrapped it without having to take VC capital, and even if it's just like initial seed money from friendly friends and family investor type of people, and you built it from the ground up without these outside influences, like that to me is the most admirable thing about what you've done. Cause it's like, you've done it on your own, which is great. It's amazing.
Yeah, we share the same feeling. That's what excites us, gives us the energy to keep building, because we know what we have built. It's not easy. And it's not, especially not easy when you don't have external capital. That also shows that we are building something that's really desirable, because our biggest traction is our customers. That's how, we're building what we are building with the sources that we have.
What markets in the US are you seeing the most investment from your home abroad users?
Texas and Florida are the two hotspots, I would say, from an investment perspective. But there's
Why do you
also a
think
lot of
that is?
interest. So Florida, of course, for obvious, there's a lot of money coming into Florida from South America, Mexico, those markets. And it's always been looked upon as the place to be. That's where you have all the tourist hotspot, short-term rentals, long-term rentals. Right? It's always been the spot where you go to retire, where you go to escape harsh winters, right? Recently, with all the insurance costs rising up, with the hurricanes being so more often than not, it has shaken some investors, I would say, here and there, right? But continues to be a hotspot nevertheless, right? Texas has really picked up. And I think one of the reasons for Texas is probably a lot of companies relocating in Texas, right? So you see a lot of companies in the Bay Area moving to Texas with a corporate friendly tax laws. You don't pay any corporate tax in Texas, right? So when a lot of companies relocate their headquarters and they move their employees, the rental demand rises as well, right? But also Texas has some good universities, colleges as well, influx of students from other areas around the country too, right? So that overall makes it's at a good state to invest in, right? Same thing I would say for Midwest is another hotspot. Relatively lower, taxes are lower, rental yields are higher. So again, a great spot for you to invest in. There's another niche market like Hawaii where property prices are probably higher, but great short-term rental income that you can make in those markets. You can officially stay in your investment property for 2 weeks and still call it an investment property. So 2 weeks of vacation in a year is not bad. All those factors add up.
That's interesting. I'm just absorbing. So I guess in states like Florida and Texas and most of the Midwest, excluding Illinois, and I don't even know if Illinois has either rent control or if it's more of a tenant's rights state, but it's easier to own properties. And if somebody doesn't pay, sorry, but you got to go. So that I imagine that drives investment decisions as well. And you probably
Yeah,
take
like
that into account.
Yeah, like that's something you want to add into a portal, investment property portal as well. At the end of the day, if I'm a real estate investor, my biggest nightmare is a tenant who doesn't pay and the laws in the state makes it really hard to evict that tenant. I understand from the state's perspective, but if I am someone who has put my hard-earned money to generate cash flow and rental income, trying to make my money work for me, that's not an ideal situation to be in, right? So why would I, if I'm an investor, I'm looking for the right states to invest in. And of course, that's where the property management aspect comes in as well. You need to be really good with screening tenants and making sure that you are renting out to the right tenant, right? So those are the things that you got to account for. And those are things that we also educate some of our first-time investors.
You mentioned short-term rentals. Is
Mhm.
that a majority of what, or maybe I'll rephrase the question. What are the majority of the rental properties that you tend to finance? How do they operate? Are they the short-term rentals, or are they the more traditional, say like a duplex where you have two tenants and they're just paying the mortgage?
So I would say our 70% volume is long-term rentals,
Mhm.
single family homes with long-term rentals.
Mhm.
That's the majority of the customer. And I'm assuming, I think having a year-long lease with a little bit more reliance on the income that you will generate over the course of the year plays into it.
Yeah.
But then again, it also depends upon the area, right? For example, if we are doing a loan in Hawaii, mostly you'll find short-term rentals, right? Same thing with, say, Orlando area or in Miami, right? So it depends on certain markets too, right? But overall volume standpoint, we see single family rentals, SFRs being the top choice. A multifamily, of course, because of the potential of higher cash flow in a multifamily transaction. So that's picking up too. We also educate our clients on multifamily, right? But the majority, I would say, is long-term rentals and SFRs, single family homes.
What's the average deal size that you're doing, like on the loans?
So the average deal size is, I would say, around $300,000.
If it's 75% loan to value, these
Yep.
investors are still coming in with 100,000 and buying
Yeah.
$400,000 property. So
Yeah.
something
And
to stick at.
absolutely. And also it's all over the spectrum too, right? For example, say we have investors who are buying $150,000 property in Midwest US, right? And trying to maximize that cash flow, really get their feet wet into the spectrum, right? And we have other investors who are buying $2.5 million condo in Hawaii, right? So we have both spectrums, I would say. But the average, when you average it out, it tends to be around $300,000.
So so we backed into it now. So you have a platform that you have the buyer, you have the management solution, you've got the lenders and different lenders for different markets and different scenarios. You then had to, through the iterations, you were finding that you were doing the same sorts of tasks by combing the publicly available market or data that's put out by real estate agents trying to sell deals. And then you've absorbed that data, not absorbed it, but tapped into it and then put it into your user interface that allows buyers to see what their cash flow would be based on an assumed interest rate and assumed loan to value. And then that helps facilitate the transaction that way. It's fascinating. It's amazing. What's the user interface look like? Like, how did you evolve that? But then also, what's the AI component of it? Do you have can you just type in, hey, I want 10% cash on cash, and this is my down payment amount. Show me my option. Is it as simple as that?
Exactly. That's where we want to get to. Right now it's basically you come and you say, okay, yes, exactly what you said. Right now it's more of you choose filters, right? And the AI is working in the back end right now to kind of get to where what you want after you give your filter inputs. But our next stage is to create that interface where you can type in questions, where you can say, okay, great, I want to analyze properties that are already rented in, say, Columbus, Ohio. And that's when we use that feedback from you to give you what you're asking for, right? But we're also planning to add questions that we know should be important to investors. We're going to nudge you or give you options with tailor-made questions that you can just click on. Show me this, show me that, show me population growth rate in this area, show me property appreciation for this area. or job or rental market prospects for this area, right? And then the AI will then basically think about your interaction with ChatGPT or Gemini or any of the AI interfaces where it's more interactive then, right? So that's where the vision is, like where we want to really build a platform, right? Where it correlates with each property, right? So you can say, okay, sure, tell me about this property. Tell me about, are there any liens or so we like, we'll keep progressing that AI to a point where as a real estate investor, you can practically come in and ask anything that you want about that property, that area, that state, and we should be able to answer or give you the intent of your query that you're satisfied and helps you make that decision whether you want to invest in that property or not.
When you have a new user in your sales funnel, do you put them through a questionnaire that says how much you
Yes.
trying to? Yeah, that makes, I apologize. I haven't been on your website yet.
Yeah,
But I imagine that's super helpful in helping you create the filters appropriate for the deals that they want to look at.
Yeah, we want
Right
to
away.
personalize everything, right? So we don't want to serve you like or go with a one size fits all approach, right? We want to cater everything to your preferences, right? Personalization is the name of the game, right? Everything that you come and see on a platform is personalized to what you told us that you want, right? And then in that process, we serve you more options. Here's what you told us. Based on this, here's what we recommend, right? However, these are what other investors are seeing, right? These are some of the properties in top 5 hot regions in the US for investment. Properties curations, right? So we are building a lot of curations as well because we think less is more when you're talking about real estate investors, right? I don't want to flood them with millions of property that listed on the MLS, right?
No.
I want to show them, okay, here's what you asked for based on this. Here's what we recommend, right? And here's some curations that we have made for you that you can look at. And then you can click show more properties like this, show more properties like this, and we'll keep expanding versus feeding you, or giving you an open filter and you getting a list of 200 properties match your criteria. And now I'm overwhelmed what to do.
Yeah. What do I do? That it becomes analysis paralysis and I
Yeah.
end up doing nothing. That becomes the choice instead of buying.
Exactly. And that's what kind of, again, it's a learning process. Because initially when we were building the platform, it was, okay, let's get the data right. Let's get that, because data is everything. And that's what we're doing. So for us to get the data right was of paramount importance. And we actually got licensed in a lot of these states to get access to the MLS feed to get the data, right? And then once we have the data, right, then we can do analysis on top of it to understand the rental income and whatnot. Because the rental income analysis is a whole different component where we have came up with our own proprietary model to
Would you call it
estimate
an
rental incomes.
APOD, annual property operating data?
But we're still thinking about a cool name, Stash. We'll come up with a cool name for a model, but I'll take your recommendation here. But yeah, so it's a proprietary data. It's not someone else can come and build it because we have spent a lot of hours and energy to get that data in. And because data is everything. You can go to Zillow and see all the listing. It's about how you are representing the data that makes the decision making easy for a real estate investor. That's what we are trying to do. And again, it's learning process. We understood, we started showing every property that matched that criteria. Then we talked to customers, we understood, okay, that's overwhelming them, right? So we need to show them curated listings so that they understand based on what they told us, what is more important to them, and then go from there, then feed them more options organically, and then see how they interact. And then based on that interaction, feed that back into our algorithm to show them similar, same thing like as Facebook would work or Instagram work. Like they will show you feed that's more relevant to you. We kind of model similarly for your investment problems.
Yeah.
Exactly.
Separate, but I guess somewhat related subject. Have you tried the ChatGPT operator function?
Yeah, absolutely. Yeah. So and I tell my team as well, GPT or any of these AI is not here to replace you. It's here to,
It's a tool.
it's a tool. You got to use, if you don't use the tool, then you are getting left behind. Especially in our way of working, we use GPT a lot. I'm a big fan of the recent 4.5 deep research that they've launched as well.
I
That's
like it
super
too.
awesome. It helps you really condense your research into a few prompting is super important though, right? The way you prompt, I see people using GPT all wrong. They come and they say, they would just ask a question, right? Of course, that's more, that leads
It's
me
like
to
a Google
believe,
search.
and it will replace Google search. And can see that trend because when people are asking questions, it's changing the customer behavior or your pattern behavior. Now I'm not going to Google to ask a question. I'm opening my GPT app and I'm asking the same question. It's a very interesting dynamics that's going on in the industry or as a whole. Now, all these LLM models are serving the search intent that used to be served by Google. Google is trying to fight back with Gemini and trying to get AI on top of its search engine.
AdWords.
How that's going to shape up in future, right? And startups like us, how we position ourselves that we come in that LLM model. When GPT is trying to serve your search intent, right? How do I get picked up by Google? Now the industry is going to change and say, how do I get picked up by LLM?
Yeah. And that's a good question. How do you?
There are ways. And of course, that's something that you got startup founder, especially the ship that we are on, where it's self-funded, right? We got to be on top of everything that's organic. We don't have stash of money to spend on marketing. Organic traffic, organic customers, where we don't have to pay money is our best friend. We got to make sure that we are on top of the trend.
Yeah. I just upgraded from the basic paid into the operator account for the podcast and everything else I'm working on.
Nice.
I think I did it yesterday, so I'm trying to figure out how to use it. I know it's got great capability. I just need to understand how I can use it in my practice. So I'll get there.
I'm sure you will.
If somebody is interested in getting in touch with you or wants to give the platform a spin, what's the best way to maybe get in touch with you and then test out the platform?
Yep. No, you can reach us out at homeabroadinc.com. That's our platform for global investors. Our local platform for this investment is going to be Ziffy. That's ZIFFY.ai. It's going to be live very soon. I think you can actually go on Ziffy right now, but we are it's still the beta version. So we have not officially launched it, but it would be live very soon. And if you want to email us, it's going to be reach.singh, my first name last name at homeabroadinc.com.
Thank you so much.
Thank you, Stash. It was a pleasure.
Right.
Thank you for having me. Take care now.
That's it for the Stash Cast. Subscribe, share, and stay ahead in commercial real estate and prop tech. See you next time.